Namaste, everyone. Welcome to the Charbak podcast. This is your host, Kushal Mehra. Time to discuss the budget. I was waiting for a few days to pass by because if I would have discussed the budget a couple of days ago, Rihanna would have eaten me up. So the good decision was that I did not discuss the budget at that time. So now a little bit of water has flown under the bridge, and we can now have a peaceful discussion on the budget. And to discuss this are my two favorite commentators. So Harsh and Ashish, thanks for coming on the podcast.
Thank you, Kushal.
Thanks, Kushal, for
Okay,
inviting.
so let's do it this way, guys. So so this question is gonna be a common question for both you and Ashish. So Ashish, I'll start with you, and then we'll go to Harsh. So let's start with this. Ashish and both Ashish and Harsh. So Ashish, you go first. What are your initial thoughts about the budget overall per se before we get into the nitty gritty?
Yeah. So, in my view, the budget basically prioritizes growth in a big way, and not just for next year, but also for several years to come. The government did that by creating fiscal space, by saying that the fiscal deficit will be 6.8% next year. But more importantly, the glide path takes you to 4.5% in 2025-26, which means that if the government wants to spend more in a given year in this 5-year period, they will have space to do that. Typically, the governments have been working to achieve a 3% fiscal deficit. I mean, we have been at 3.9, 4.3, 3.9, we came down to 3.5, but 3% was not achieved. So that has been the general, let's say, expectation of the rating agencies and of the the commentators that government will get there. But now, good thing is, because now the government has already signaled a higher number, that is the expectation which has been set. So people will not keep questioning government every year as to what is your fiscal plan per se, right? So I think that is a big positive, and I think it is coming. Good thing is that now that the economy is actually stabilizing and the tax collections are increasing and so on, the government actually will have more spending room in that sense, because if they undershoot the fiscal deficit, it will not be because of spending, it will be because of higher tax revenues, which is actually a very positive thing. And this also basically takes care of the undue attention in some ways which was being given to the opinions of rating agencies, in the sense that we were far too conscious, far too conservative in our own the fiscal stance, which has now been taken care of. So to me, that was one big takeaway. The second one was on the policy side. The budget actually, although you see, budgets have become redundant in some ways when it comes to policy formulation. In the last 5-6 years, bulk of the work is happening outside the budget, actually, and it happens through the year. It is not like slated for like one day a year. So in that sense, the policy signaling is not like very common in budgets these days. But in this budget had a very important part on the divestment. What government said was that they will look at 4 strategic sectors, which is banking and financial services, minerals being one, telecom and transportation being another one, and there's one more, and defense, of course, defense and some kind of manufacturing. So the government will essentially participate only in 4 strategic sectors, only with a few PSUs. The rest of the PSUs will be either be made subsidiaries of others, or they will be divested. In the non-strategic sector, which is everything outside of these 4 areas, the government now proposes to sell everything, which is like a huge statement. Remember that we actually haven't sold any PSU since 2004, after the Vajpayee government. I mean, this government has done some divestment in the form of ETFs and some subsidiarization, etc., and some mergers, etc., but not like a privatization per se. So that now potentially becomes a reality, and for several PSUs. I mean, hundreds of them, basically. So that is like a huge statement to make, and of course, it will need a lot of political will. And the threats of strike has already started. The public sector bank, the unions of the employee union of the banks has already said that they will go on a strike and stuff like that. But I mean, that is to be expected in the current environment. So to me, those were the 2 major directional things in budget. I mean, we can talk about the details later, numbers, etc. But I think those 2 things stood out for me.
So Harsh, what about you? What were your initial thoughts? Let's say once you heard the budget, the Honourable Finance Minister's speech as it commenced. So what were your thoughts?
So I think the big takeaway was exactly what Aashish mentioned. I think when she mentioned 9.5% will be the fiscal deficit number for FY21. It was that moment that you knew that the Prime Minister and the Finance Minister and the entire government had taken the leap of actually saying, okay, we have to do what we have to do to get growth. And as the economic survey just a few days before the budget had mentioned, in India especially, growth leads to sustainable debt to GDP trajectory and not reduction of fiscal deficit uploaded upfront per se. So I think that it was that there is no right kind of formula to kind of understand that. Although to me, to a lot of people, it might seem like common sense, I would say, but it was a contentious call. The government has been very fiscally conservative or relatively fiscally conservative over the last 6-7 years, especially the first 3-4 years of Modi's first term. And that was fiscal probity along with his first two appointees being relatively hawkish on the monetary side was a key part of Modi's image so far. Now the problem was that was overdone. So I'll give you a very quick example just to give a broader context. Abenomics in Japan had 3 arrows. When Shinzo Abe was the Prime Minister of Japan, it had monetary easing, fiscal easing, structural reforms. And actually, structural reforms is the thing that Shinzo Abe least delivered on. But monetary easing and fiscal easing happened a lot. In India, it was the opposite. The last few years, there was a lot of structural reforms. We actually got fiscal easing and monetary easing to the extent we needed. In some cases, under Urjit Patel, especially, I think monetary policy was in a very wrong direction. So now that is very, very strange in a democracy when you see structural reforms are politically contentious, because there is some vested interest group which loses. We're seeing that with farm protests right now, so-called farm protests right now. As Aashish mentioned, we are going to see more and more union strikes for bank nationalization being reversed effectively. So for a government to push structural reforms like GST, IBC, RERA, many other, for example, formalizing the economy, cracking down on Benami transactions, etc., and not put the, like you're only going to gym, but you're not having sugar at all for 12 months. It sounds good, but for most people, it's not realistic. So for the idea is that by not doing that, this government to get re-elected in 2019 with a bigger mandate shows the kind of excellent politician without any moral judgment one way or the other that Narendra Modi is, because he had excellent delivery on the ground for kind of micro welfare initiatives, Janthan, sanitation, all these yojanas, and of course, the cultural side, the national security side. So in a way, he was playing with one hand tied. He personifying the Indian economy to that extent. We were playing with one hand tied. Now we have said we'll play with both hands, and we are basically trying to copy all growth models. From Tudor England to colonial America or post-colonial America, Germany, and then East Asian countries. Infrastructure, manufacturing, and exports. The only difference in our case is our exports are more services than manufacturing. And on manufacturing, we are playing more defense than offense. So we are basically saying we will do whatever it takes to build infrastructure, whatever it takes to do Make in India, whatever it takes to do Atmanirbhar Bharat. So if it requires industrial policy, PLI subsidies, we'll do that. If it requires some tariffs, we'll do that. If it requires an active currency management over and above volatility, looking at volatility like RBI used to do for the last 10-15 years, we'll do that. On infrastructure, if it requires InvITs and REITs, we'll do that. More tax incentives. We'll create a DFI. We'll create a development financial institution for infrastructure. We'll do whatever it takes to make sure infra and manufacturing gets done, because services exports is one thing which is anyways on autopilot with COVID and Zoom and work from home and our educated workforce and so on and so forth, and the cost differential. So the other two legs of the tripod, so to speak, where we were historically failing, we have basically now decided to throw everything at it. We will get it done no matter whatever the shortcomings and nuances. So this budget says we will get it done. That is the big message. I think that's why the market rallied. That's why there is a lot of feel-good sentiment, because there is a sense of a self-imposed hindrance for such a large economy which has never defaulted to just go by, go with an accountant's mindset, kitna hona chahiye, itna hona chahiye. They're saying, no, you need to first have a growth mindset. So I think that is the big shift, given the government's DNA so far itself. And I think that is the big headline here.
So let us...
Kushal, sorry, I just had one point here, which I also found interesting. See, this time the way the budget was presented, in the first section, the FM talked about healthcare as a whole. Now, if you really look at the allocation of the 2.3 lakh crores which has been made for next year, Not all of it actually goes to MOHFW, right? So it doesn't go to the the health ministry. A lot of it is stuff like sanitation, Swachh Bharat. A lot of the preventive well-being type measures have also been put into healthcare bucket as a statement. I actually feel that the government might be readying for a consolidation in the government itself with that kind of a messaging, that the budget should be done for a cause and not by the ministries. Typically, as we know, the budgets in India are assigned to the ministries, right? Each ministry gets a headline number. This time, if you see even in the commentary, not many people have done this typical annual exercise of last year isko itna mila, is saal usko itna mila. I think the only comments which were made were for education and for health, where actually the numbers have gone down for education, 6,000 crores lesser. And of course, defense, because that's the headline number which everyone looks for. But not a lot of analysis happened this year on individual scheme allocations and individual ministry allocations. So I feel that this might actually be a signaling for what might come down the line, which is that the budget itself may become less ministerial driven, and hence the ministries themselves may get merged or consolidated.
Yeah, but in health, don't you think, Aashish, a big reason for a significant chunk being increased is also that the amount allocated for the COVID vaccination too, right? So that we'll have to figure in that aspect when it comes to the allocation of the health budget, right?
Yeah, no, absolutely. No, I'm not questioning that. I'm saying that a lot of stuff which was typically not called health was now called health in this budget. So I think that is like a signaling for other ministries that you may become redundant in 3, 4, 5 years' time. That was my point.
All right. So now let us I wanted to continue on what Harsh was talking about, the fiscal deficit aspect. Now, I was pleasantly surprised with the kind of shift the government has taken, because that this is just the fact that every budget before this has been a very different kind of a thing, where actually Harsh actually hit the nail right where it should have been, where it was like it was very it was an accountant style of doing things, ki mere debit side mein ye hai, mera credit side mein ye hai, I'm matching my balance sheet should match, and everything should look nice, and I need, I care about this rating. So how much do you think, and this is again for both of you, so Aashish, you can go first, how much of this push away from that obsession with being fiscally correct has got to do with the pandemic, in your view?
I think a good crisis should never be wasted, as they say in policy making, right? So obviously a crisis comes through, you have to kind of capitalize on it. So I think, of course, there's impact of that pandemic in the thinking of the way government is looking at. But really speaking, the fiscal question is just one part of the policy making. If you really see the big changes already happened in the previous year, right? In terms of labor reforms, farm laws, defense manufacturing, FDI increase, mining decontrol, licensing decontrol, and privatization. A lot of that stuff had already taken place in the last 4, 5 years. So I think the fiscal part was just a logical continuation, that we have anyway looked at doing 7, 8 different things already big headline numbers. Government had like hundreds of things, but let's say 5, 6 big items. Then the fiscal part just becomes a logical continuation. So in that sense, it's not very surprising that it has happened. But of course, a pandemic has played a role, but that role also started playing not now, but in May last year.
Yeah. So but my point was that, Harsh, if what worries me at times is that if we would not have been hit by this pandemic, I get worried. I always get worried that why does it take such a huge catastrophe in our country for us to do what basically should have been done in the first place? That's what worries me. I'm just trying to play the devil's advocate here, because somebody has to, because koi criticize hi nahi kar raha is budget ko.
No, I think, Kushal, that's a valid question. I think what has happened is that because of the pandemic, governments all over the world obviously basically have opened up their fiscal taps, so to speak. And that has created an environment if the rating agencies, for example, go out and remove us from investment grade to junk grade, while basically tolerating all the other countries or all the other major economies, rather, with having double-digit fiscal deficit to GDP ratios, that would be absolutely untenable and blatantly hypocritical, right? So I think to that extent, one must agree with you that the government also kind of took part of the zeitgeist, and as Aashish was saying, capitalized on this crisis, a very tragic crisis, but you had to capitalize it from a public policy point of view. So maybe so your point stands that why was this kind of fiscal glide path to 4.5% in FY26, which is earlier supposed to be 3% or something, or 2% or something? Why was that not done earlier? Because for example, right after re-election, this government actually increased the top marginal direct income tax, and if you remember, that was a massive kind of sentiment dampener for the markets, and in general, the government came across as perhaps being slightly overconfident on the economy right after re-election. But since then, it seems that the government has, to its credit, been very uh, been willing to reorient, correct its mistakes, learn, and then actually do much better. So it's been one step backwards and 2 or 3 steps forward. And I must say that the finance minister, who initially got a lot of brickbats, has really grown into the role. What happened? What I mean, I just wanted to mention that because when, for example, that June 2019 budget was so terrible or terribly perceived, for example, rather, there are, of course, many moving parts. The tax was only one small part of it. She got all the brickbats. But now, in this case, it's important that we also give her due credit. Of course, the PMO is very important in all governments, especially this government, but the line ministry must also get due credit. And I think your broader point stands, but nonetheless, at least given the zeitgeist, we capitalized on that. And that is still a brave call, because we are not a developed economy. We don't have a AAA rating. So I actually wrote a tweet today saying that I assume there are 2 countries. There's one country with 1 billion people and $3,000 per capita income. Okay, so that's a $3 trillion GDP. There's another country with 10 million people, but $30,000 per capita income. So like 100 times less the people, but 10 times more the per capita income, and therefore 10 times less GDP. Now, rate, and you have similar debt to GDP ratios. You've never defaulted in both the countries, etc., etc. What rating agencies do is actually one of their key criteria is per capita income, GDP per capita, which to me makes no sense. Because let us say if India opens up, which is gradually opening its capital account, that you have a $2.5 trillion sovereign bond market in Indian rupees, very liquid. For a smaller economy, you cannot access that. So if we kind of forget why quantity has its own quality, and there are issues with rating agencies, partially out of maybe some bias, or conscious or subconscious, partially also because India and China are such outliers in terms of size, right? What would be kind of understandably applicable to most countries simply does not apply to that extent for billion and a half countries, whether it's financial flows or trade flows. So I think without attributing too much malice, there was a lot of kind of unconventional thinking required, and the government was conservative in a small c sense. But now with the pandemic, they said, okay, fine, let's just kind of rip off the bandage and ek baar mein sara. And one thing that both Aashish and I have not mentioned so far is that the fiscal deficit is not just increased; it has been made transparent. So all the off-budget borrowing in terms of FCI, food corporation, small saving funds, everything is basically there's no any other line item. Now you don't have to separately calculate what is the real consolidated deficit of the Union Government of India. Okay, the numbers are what they are, and last year there was already a big improvement on this because they had given a separate annexure in the form of a document. This year they've just put it all in the same number. So like, what happens when a new CEO comes into a company and the company had a bad 3-4 years, the CEO basically says he takes a lot of these one-time losses. And they say, okay, now onwards, because some of his stock options might be valued accordingly, whatever. They say, okay, we have a clean start. So the pandemic has given us a clean start in more ways than one. And the government has basically capitalized on that.
Yeah, and Harsh, just to double down on your point, I actually want to put this on record on the podcast from my end also. I have been absolutely horrified with the kind of comments that have been made on the finance minister at a personal level, even in the past budgets. And it is, if you're going to give her the brickbats for all the things you have, the government has done in the past in the budgets, it is only fair that you give, I'm not going to give any credit to the prime minister. If you're going to give all the blame to the finance minister when the budget goes bad, then you give her all the credit when the budget is good too. So I'm just saying it. If it's bad, and you want to blame the finance minister, if it's good, all the credit also goes to the finance minister. She has been absolutely, what I liked about her is the way she has handled herself. I think I've always been a fan of Nirmala Sitharaman anyways. I think she's a very gracious, lady, and the way she has carried out herself throughout the nasty attacks, which sometimes, I don't know, वहां पे मिसोजिनी नहीं आती है हमारे पॉलिटिकल कल्चर में, बाकी सब चीजों में आ जाती है. फाइनेंस मिनिस्टर को कुछ भी बोल सकते हैं. But anyway, so I had one more query about the bond market. So Aashish, there has been a higher than expected, I think around $164 billion dollar plan for the new fiscal year. So it might affect the state of the sovereign bond. So are you worried about that in any way?
See, the borrowing of the government will obviously go up, which is what that 6.8% of the fiscal deficit means, right? I think we will borrow about a lakh crore more next year. But if you could borrow more this year, which was a pandemic year when there was no growth, no revenue, no tax collection, and we managed that borrowing program, doing the same in a year where you are expecting, the growth figures are 10.5% for RBI, 11.6% for the Finmin, 11.5% for the Finmin, and about 12% for the, I think 12 was a number in the economic survey, I think, right? So the at a conservative midpoint level of 11.5% growth next year, which is expected, I mean, I'm pretty sure that the government can manage that 1 lakh crore extra borrowing. Of course, the bond yield, the 10-year Indian bond yield did shoot up that day on the budget day, while the stock market was cheering. The bond traders were probably not very happy that day. The yield shot to 6.06, I think, at the peak, which from 5.9 odd. So there was a good 16 beeps rise in the yield. So that obviously RBI has to work on it, and I think today RBI did signal the accommodative stance, which means that they will do some open market operations, etc., in the next few months to kind of bring down the yield again. But yes, I mean, of course, the yield cannot be 6%. It's too high, because if the government is borrowing at 6%, then the companies obviously have to pay a premium on top of that. So the fact that some of the loans which had become cheaper in the last 2-3 years, I mean, that has to continue, and in fact, they have to become cheaper further from where they are in the for the corporates and for the retail borrowers. RBI also announced a very interesting program today called Retail Direct, where they want the retail investors to buy the government bonds directly. I don't know how it will be implemented. I think the implementation will be the key, because RBI really is not in the business of servicing customers. So I really hope that they design this properly when they say that you can open accounts with RBI. But nonetheless, what it means is that over the next few years, what's going to happen, and I mean, this may not happen next year. So the government borrowing problem continues for next year, which needs the yield management has to happen next year. But in general, let's say over the next 5, 6, 10 years, as the financialization increases, the money which the people have been putting in fixed deposits or in, let's say, markets, or doing nothing with their money in some cases, will probably, some of it will get allocated to the GSECs, which is a very interesting proposition. I'm not sure. I mean, this is for someone to model what money will go to the GSECs versus the banks versus the FDs. But a pretty interesting idea, which I'm sure is one of the levers which the RBI intends to use for managing government yields over a period of time. I mean, it's a continuous lever. It's not something for next year. It's going to have a long-term impact.
Okay, another question, Harsh, I have, because I know you've been very vocal about this subject and we've had multiple discussions. But from what I've understood, India has raised certain import tariffs on solar and mobile phone equipment and auto parts. Now, what kind of an effect do you think is it going to have on our exporting capability? It might have a short-term boost for our local domestic consumption or manufacturing capacity, but what do you think is going to happen to our exports in this line?
Kushal, hi. Sorry, I had to just plug my laptop. It was running out of battery. I think I'm not sure about what happens specifically with some motherboard import tariff extension or increase of 2.5% and something on solar energy or solar batteries, because that's the whole point of industrial and trade policy, that it's very, very specific to that particular sector in industry. You want ideally imports, raw material imports to get as low duty as possible, and you want the post value add product or post realistic value add that you can do in India for the time being, given the current state of industrialization. You want that post value add product to be as highly or relatively highly duty. So you basically want to incentivize getting cheap raw materials, doing the value add, and therefore having some protection from competition on a time-bound basis. There should always be a sunset clause. So that's a broad idea of industrial and trade policy. The problem is, of course, if you go by a libertarian theory, you can say that, well, the government can never pick winners. And I think the truth is somewhere in the middle. The government can pick winners, the government can also be very bad at it, and government can also be corrupt at it. You can also get lobbying by various industries, and for example, the PLI schemes in a government which is probably less, uh, you know, attracted to financial probity at the top, perhaps, could easily be compromised. So there are all kind of flip sides to it. Somebody like Dr. Arvind Panagaria would tell you a better way to incentivize exports is to have a lower currency, and or have something have a very flat, non-sector specific PLI slash duty, so that you don't basically end up picking winners. Now, the reality is you need all hands on board. As I mentioned, you need something on subsidies, you need something on tariffs, you need something on the currency side as well. If you try to keep the currency too weak, you'll have too many rupees in the Indian market because you're buying dollars, and therefore you're releasing rupees in the local market, and therefore you have all kinds of inflation and local monetary macro issues. So I think on the whole, some complaint by the industry is understandable. I think in the cell phone case, they were saying this particular item, the 2.5% has been added on tariff. We don't really manufacture. So we'll just end up importing from China. In any case, the phones will be slightly more expensive. Now they're saying that it might be true. I'm not an expert on the industry, but it might also happen in the next 6 months. Somebody might start manufacturing that. And as it happens that the Tata with a Taiwanese company, they just invested around 6,000 crores in, I think, Tamil Nadu for another cell phone production plant. So it's very sector specific. But I think broadly speaking, this push is the right push right now. Even though a lot of people disagree, Urjit Patel disagrees in Financial Times recently. Dr. Panagaria, who we all respect, he disagrees. But it's a 3-4 year thing where we have to do to make sure that we get some Chinese production relocated, not just to Vietnam, but also to India. Vietnam is very close to China. It's very close to Hong Kong. It's very easy for people to relocate. India is a kind of a different fish altogether. So I think right now it's needed, but I am also skeptical from it from a long-term point of view. But right now, I think it is the best of bad options.
Now let's get into the things that
there was a very. Kushal, just one comment here. There was a very good report from Neelkant Mishra of Credit Suisse where he explains this whole mobile phone manufacturing situation. In that report, he has assessed that the assembly cost of any phone, let's say between low end and high end, could vary between 3% to 8%. Now, what the government is doing is essentially, government is saying that the incremental sales of phones, you will get a part of that sales value back, right? That's what the PLI is. You've pegged it to sales and not to the value added. So what happens is that the government is going to give back practically all assembly cost to the company which is manufacturing in India for the phone sold in India, and this doesn't even include exports per se. Just the Indian volume will take care of it. I think that is a very very interesting proposition because that will attract the assemblers, and once the assemblers are in India, they can go beyond that piece and start once you are kind of tied into India because for 5 years you have you've been reimbursed for practically the entire cost of the OEM will essentially be reimbursed to the OEM, right? So the assemblers essentially set up for free in India. I mean, from that perspective. So I think that is what the catch is. The government is trying to put the hook in the right place where get the right intermediaries, which will then be able to move in either direction, doing more low-end work and doing more high-end work. So that was a great report. Unfortunately, it's not a very public report. So, but he had the best explanation of this phenomena.
All right. So now let us get into some of the things that I think were very good in the budget. So I'll start with something from my field. And just to put it on record, the government has announced, I think, 7 textile parks. And this time what they're calling it as is our mega textile parks. Now, I have not read the fine print because the government never comes out with the fine print for a while. They plan to open these mega textile parks in the next 3 years. Now, my only hope, and I'm praying that they don't make the mistake, is usually what happens is when the governments make these parks, they make it for spinning, weaving, and they end it there. They don't add the dyeing and yarn dyeing and those aspects in it. Then it does not create the holistic effect, which should be in a textile park. But from the looks of it, the government is open to the idea. So if it is open to the idea, this is a very good thing. Again, circling back to my chat with Harsh and Professor Panagaria, I think one of the things that he mentioned, and he actually put a very serious focus in his book, was apparel manufacturing and textile should be the sector for the next 20 to 30 years that India can get a lot of easy, low skill jobs in this country. I just hope, the textile ministry, I have no information that the textile ministry is doing. This is not a criticism of the textile ministry. This is just a hope from them. I just hope they actually reach out to some manufacturers and big buying houses outside India, and they create some sort of an atmosphere. So that is something that I like. Now I'm going to get into something very specific over here with you guys, and let's get into the details. Obviously, you guys have mentioned that the unions are already getting into it because the government has talked about the big word disinvestment. So now the government has said, if I remember correctly, it was two banks, right, that they're going to disinvest. Two banks. Now
This year.
obviously they have not announced which bank it is going to be. At least I don't know which bank it is going to be. And it was also said there was something to be done in terms of LIC. Now here's the thing, so let me lay it out for both of you. Now, just like we had it with the farm laws, right? Fundamentally there is nothing wrong in this legislation. Fundamentally there is nothing wrong in a bank disinvestment too. Now, I don't know, I have a feeling that maybe the bank disinvestment will not be as much as a problem of let's say in comparison to a farmer's bill, simply because I think it is not an emotive subject. It's not like there is a bank union vote bank pan India. It's not like bank union ke liye anna tum sangharsh karo, hum tumhare saath hai, kind of a sentiment. I'm just looking at it from a psychological aspect. But my question to you is not at a psychological aspect. So Harsh, I'll start with you. What do you think would be the impact of disinvestment on our economy if and when we actually manage it?
So, by disinvestment here, obviously, we are now basically talking about privatization. Because if disinvestment, government stake goes from 75% to 51%, for example, if it's still government owned. And so it's not just about monetizing government assets. And by the way, that's a big part of this budget of existing infrastructure assets being monetized through TOT, InvITs, even in the railway budget, actually, for DFCs, as Piyush Goyal later added on. But so it's not just about raising revenue. That's one aspect of it. It is about raising productivity of that corporation, because the management is now in private hands, and therefore the argument goes, in general, not always, there are also private sector scams, etc., that the incentives are more aligned and there is a clear focus on creating shareholder value, while keeping in mind the broader stakeholders. But right now, they say in the case of PSUs, for example, I don't know what the SBI CEO salary is, but it's probably 1/10 or less than that of an HDFC Bank CEO. Even though it has more assets and it's a bigger bank in most ways, except in market cap. So clearly there are issues of compensation, risk taking. Maybe even the loans you give get scrutinized differently because you're a government-owned bank versus a private sector bank, and so on and so forth. And similarly, beyond banks for public sector corporations. So it's basically about increasing efficiency. And the point is a broader signaling value also. So for example, just by saying this, along with SBI's own results, SBI's stock has increased by around 50% in the last 1 week, the last 3-4 days. So what happens is, when you say that we are going to actually privatize 2 public sector banks, the market values of all public sector banks increase. And then basically, even if you just disinvest and not privatize the other banks for the time being, you raise that much more revenue. So it's a signaling mechanism as well. And finally, in terms of the number of staff per account or per rupee handled, or the number of branches, you'll have to look into the details. You basically have, in the case of public sector banks, you have more people than required in some cases. Now, it's very true that public sector bank union said, well, during demonetization, we had to work very hard, we had to work overtime, we had to work over weekends, etc. And all those complaints were there. But basically, what happens is, young and dynamic performers don't get promoted as easily in a public sector setup, in any bureaucratic setup, as they do in a private sector setup. So you basically, good performers leave, and people who want that job security for life remain. It's a self-selecting mechanism. This is not to say that there is not scope for some public sector banks in some very niche areas. We should not. So, for example, ISRO is not a public sector enterprise as such, but ISRO, obviously, you need something. You need there are deep research areas where you want people to just work and without having to think of their livelihood. They know that their job is guaranteed. So this is not to say that there is not some benefit of that kind of approach, but we have clearly gone too far into that. And even the Chinese, who are now kind of reasserting the Communist Chinese Party's control over private enterprises, Jack Ma being the most famous example of late. In the late 90s, they had massively, downsized many of their SOEs, what we call PSUs, they call SOEs, state-owned enterprises. So it's very necessary for capital to be reallocated towards more dynamic places. So like BPCL is about to be privatized. LIC, what you mentioned, the IPO is about to happen. GIC, one public sector insurance company, is also about to be privatized. So LIC won't be privatized. LIC will be listed. GIC most probably will be privatized. Two public sector banks will be privatized. In the railways, for example, they may not privatize, but the railways they'll convert it into a corporation. Many large parts of it, and that may lead to some parts of it being listed later on. So many for example, something like VSNL was part of the kind of telecom ministry 20-25 years ago. First you kind of corporatize it, then you list it, then you privatize it. So there are steps across all the entire food chain, and the government has made a very bold claim. And you're right about the psychological aspect of it. There will be some protests, but I think that will be handled. That is to be expected.
Aashish, so one more question I have. I just thought of it. What do you make of the bad bank situation? So finally, the government has said that they are going to go forward, and they're actually going to go ahead and formulate a asset reconstruction company. So how much of a positive development is this? Because I've been listening about, we've been hearing talks of this whole thing that we'll set up a bad bank and stuff like that. How much of, I did not even listen to any expert covering this. Don't you think this is a significant thing that the government has actually finally put the money where their mouth is and has said, no, we're going to go ahead and we're actually now going to do it?
So two parts, Kushal, here. See, the ARC, first of all, it's still a ARC mechanism. It's not like a bank in the sense that it was being talked about earlier. Nonetheless, look at the SBI results yesterday, right? The asset quality commentary from SBI was phenomenal. As Harsh said, the stock has gone up about 60% in some 6 days or something like that, right? So the fact is that asset quality is actually improving now. How many banks would need ARC right now? I'm not very sure. Like, if depends on actually the post-COVID NPAs, we will still need to kind of observe for the next 2-3 quarters, especially about small companies. MSMEs may face some stress, etc. I think the general perception has been that, or the general agreement has been that, while the top 60-70% of the corporations have done very well, the bottom 20-30% have faced the brunt of it in terms of the pandemic impact. So how much do they default, and because of that, what is the default of individuals towards personal loans and some of the other, the individual, the credit which is offered by the banks? That remains to be seen. Nonetheless, those volumes will be still lower than, let's say, the corporate ones. Now, since the economy is improving, there may not be much to offload to the ARC, or certainly there'll be less to offload to the ARC. Let's say what would have been the case 2 years ago. So that brings into question the timing of the ARC itself. The second point here is that what is the design of this ARC? Is government going to participate in it? Will it leave? Or will it put some equity and say that, okay, I'll put 10,000 crores and then let NIIF or other kind of entities put in their capital, and then basically they manage the assets? I think some of that needs to be seen. Announcement is fine. I think it's obviously there's no harm in it in the sense that there's another vehicle to kind of clean up the balance sheets. But I think the real impact will be known once we know the design of it, which hasn't yet been made public, hopefully in the next few weeks.
So Harsh, what do you make of it about the whole asset reconstruction aspect?
The whole ARC, AMC game, the bad banks or bad debts. First of all, the context is obviously IBC has been suspended, right, for the pandemic. So the whole idea of there have been a bunch of short-term pain, long-term gain reforms for the last 6-7 years, and of course, the mother of all short-term pain, long-term gains was the pandemic itself. I've spoken separately about how I think, once the tragedy is over, in many structural ways, the pandemic actually helped India. India is the biggest beneficiary of that. So the idea in the government so far, while there was a lot of internal debate, as far as I know, the idea was a bad bank is a good idea short term, but may have a moral hazard going forward. So the government was not necessarily open to the idea till pre-pandemic, or if it was open to it, it never quite happened. But again, just like everything else, and now that we are throwing everything at manufacturing, as I mentioned, in terms of tariffs, subsidies, and currency, in terms of infrastructure, in terms of all the equity vehicles, the debt financing vehicles, the banks, InvITs, REITs, same way for the financial markets, we are basically saying, while IBC comes back after the pandemic, let's also do a bad bank. Let's again overlapping. Let's also do a DFI. Let's also get our bonds listed on global indices. Let's also do retail direct, as Aashish mentioned, for government sovereign bonds, something I mentioned in an article in Mint a few months ago. So the idea is, let's make financial intermediation as smooth as soon as possible, because there is one of the kind of the overhangs on Indian growth for the last few years, which happens because if you have a 8-9 year up cycle and 8-9 year down cycle, towards the end of the down cycle you have NPAs. We had a lot of NPAs in 2002-3. They kind of bottomed out. 2001 to 2002 they bottomed out, and then we had an up move. It kind of coincides with the weak dollar cycle, and again we are basically seeing the start of a weak dollar cycle in March April 2020. It kind of has flattened out in the last few weeks, but I think that cycle continues. So it basically again shows, at a larger level, the government is saying, as Aashish mentioned, we'll give a few 10,000 crore rupees, and we have to wait to see how it is operationalized. But I think it's a signal that we will do whatever it takes. I think that's the big message from the ARC.
Yeah, so just for the record, I think the government has made a proposal of an additional 11,000 kilometers in highways and metros in 27 cities across India. And I mean, before people say, I'm very much aware of 4 pole-bound states have gotten, like Tamil Nadu, Kerala, West Bengal, and Assam have gotten some extra. I mean, it's as if I was reading an article. They're like, oh, pole-bound states are getting extra. I was like, हाँ भाई, तो political party इतना तो करेगी. As if it's outside India. हम लोग जाके पाकिस्तान की highway बना रहे हैं, वहाँ India की highway बना रहे हैं. So I don't know. But Aashish, I wanted to come to you on this. There were a few chirps that I heard from my friends in the IT sector. They were not really happy because they say they did not get any SOPs for the IT industry in this budget. So क्या उनका गम सही है? क्या उनका दुख सही है?
I don't know who these people are who want government to intervene in IT industry. The IT industry has grown precisely because government did not understand what it did. And by the time government caught up with the idea of what was happening, it was too big to be tinkered with, right? So I think you should tell your friends that if they did not hear the word IT industry in the budget, that is actually the best thing to happen.
Good. Now let's get into the one thing where at the end of the day, most of the people who listen to this podcast are your average middle class Indians, जिनका एक दुखड़ा already मैं live chat में पढ़ चुका हूँ. हमारे लिए तो कुछ नहीं किया. So Aashish, so just to inform everyone, at the micro level, there was no change in the personal tax rate, slab or break. The only thing I know is that now they have gotten a parity between the unit link insurance plan, ULIP, and mutual funds. So that is a good thing that they've done. But is there any justification? Does the middle class have a right to complain, Aashish?
See, again, I said this on the Bharat Vata podcast also on the evening of first, that I don't know who these people are who in this year wanted tax breaks, right? I think the whole whole discussion was about which new tax is going to be imposed. Will it be called COVID cess? Will we get a extra wealth tax, or will there be an increase in LTCG, SC, short-term capital gains, etc.? So I think expecting like 9.5% fiscal deficit ke upar, if you were expecting a direct tax cut, वो तो नहीं होना था. I mean, like 67% of the government revenues essentially is just tax, right? So उसमें GST आया नहीं, अपना 3 महीने 4 महीने को GST बना नहीं. So how could direct tax be cut this year? Now, having said that, what I never understand is that why don't middle class, whoever the quote unquote middle class, salaried class, why are they not looking at the Sensex, right? I mean, if you're probably not going to get benefits from the tax, I hope your investments have gone up, and one reason they've gone up is precisely because the government did not tinker with. I mean, the fiscal situation was managed in a way that the market was enthused about the future, right? So I think the commentary, I think people need to move away from a very simplistic commentary on कि tax cut नहीं हुआ. See, budget is a much bigger thing. Okay, tax cut नहीं हुआ, but अभी आज RBI ने bond market खोला है, उधर पैसे डालो, वो तो guaranteed money है, India sovereign money will be used for good purposes, right? For government borrowing and investing in infrastructure, social good भी हो जाएगा उसमें. You can, I mean, the Sensex itself has gone up. So if you are, I mean, I think some people will be invested in the markets, right? Or I hope they are. And I mean, some of them are, or most of them are. So they should be happy that, okay, there's another revenue where there's a compensation being made. There was also some criticism around the, okay, so first of all, the ULIP and the mutual fund again is a good thing because ULIPs have been missold in India for donkey's number of years. We know that, right? Selling ULIP as a tax, I mean, so the way the ULIPs are sold is that आपका life insurance से तो बात आती ही नहीं है उसके अंदर. People talk about how I will invest in this fund, that fund, and at the end of it, at the maturity of the policy, you will get tax-free money, right? So usme the word insurance is not even uttered when ULIPs are sold. I'm sure all of us have gone through that process. So abhi finally ULIPs can be sold as an insurance instrument and not like a mutual fund, right? So in that parity, yes, of course, this will be a stock versus flow thing, right? So the previous policies don't get impacted, but whatever is sold as of some date will get impacted. So they don't buy ULIPs. I mean, it's not like the past thing is getting impacted. The only negative impact came from the PF thing, right? Where they said that the employee contributions, which are more than 2.5 lakhs in PF, will be taxed at the marginal rate of that individual. Now, fair enough. I mean, it's a negative thing, no doubt about it. People will be paying more tax. But again, let's look at it in a slightly more detailed way. Let's say you are investing 10 lakh in PF. Now, the limit to invest in the VPF, the voluntary PF, is about 88% of your basic, right? So if you are investing 7.5 lakhs in your in PF extra, which means that first of all you are saving 7.5 lakhs, right? So if someone's salary is say 50 lakhs and you're, I mean, if someone is saving 20 lakhs, 10 lakhs, which is 20%, which I think is a very good savings rate, right? In today's environment, saving 20% of your gross salary is a pretty high number. Now, of that 10 lakhs, you're putting 7.5 lakhs extra in PF, right? But to actually put 7.5 lakhs, you first need to be making 50 lakhs to start off. Now, at that salary level, why are you not exploring other avenues of investment? That then remains a question. But ठीक है, whatever be the reason. 7.5 लाख का आपने इन्वेस्टमेंट किया है, उस पर टैक्स बनेगा, उस पर इंटरेस्ट बनेगा 8.5% के हिसाब से, let's say 70,000 rupees. The tax, and if your marginal rate is 30%, you are paying 20,000 rupees more. I mean, I really don't think that, barring a few very clever individuals who have apparently got hundreds of crores in the PF, as one of the press release said today, but leave aside those 100, 200 very clever people in the country, and I think there always are those people, right? So you can't do much about it. But really speaking, how many people are going to get impacted by more than say 5, 10, 20,000 rupees? There's an impact, but my sense is that 25,000 is pretty much the upper cap. So you need to replace that income elsewhere. When markets are growing, there are other revenues coming up, so you can always replace that. So it is fine to criticize. If you feel pinched with the decision, fair enough, you criticize. But I think you should also put a price on your own criticism. I mean, is 20,000 rupees worth like 100 tweets or 50 Facebook posts? That's that trade-off you need to make with respect to your own situation.
So basically, Aashish is telling you, Rihanna से सीखो, वो 18 करोड़ में ट्वीट करती है, तुमको शर्म नहीं आती? So Harsh, what do you make of it? The slabs remaining the same.
See, I think first of all there is something to be said about taxes not being tinkered in general. I mean, not every budget is बोलते ना हाथ में खुजली हो रही है, कुछ करना है. Like it's okay if direct taxes are not changed for 2 or 3 budgets, it's not a big deal. It's a good thing. I mean, we can have some predictability going forward. I think the finance minister had once said that the June 2019 taxes will be reversed by 2022. I think she had once mentioned. But of course, as Aashish rightly mentioned, to kind of expect that to happen right after a pandemic would be extremely foolish. So given that, I think the budget and I must mention that, whether it was kind of planted by the party or the government, but the expectations were very nicely set, because everybody was like, tax bhadne wala, and then of course, tax not being increased, everybody got very happy. So I really want to meet those people who actually, as Aashish is saying, who was expecting a tax cut. But that is a guy who's even more optimistic than me about life. So I really want to meet that person. So I think on the whole, in this year, the fact that the government bit the bullet, had a high fiscal deficit, did not increase direct taxes, did not increase the corporation tax, did not increase the capital gains long term, short term. Of course, GST, anyways, they can't do it in the budget, they have to do it through the council. I think that's a very strong signal that says that, we are, as we said, it's not an accountant mindset. You go for growth, there is some predictability. Of course, as far as I know, the direct tax reforms committee report was not never made public, as far as I know. So and my guess is because the suggestions are perhaps too radical, probably close to low taxes for the rich and flat tax, and therefore the government knew it would probably never do it. So that being that, I think given realistic expectations after what happened last year, it's a great positive that they did not tinker with it. I hope they tinker very little going forward as well. Sometimes even bad taxes are okay if you know predictability. At least fine. You don't have to look forward to these things being changed every 12 months.
Got it. Well, all I'll say on this is, if the government wants to really be as Hindu as possible, भाई एक काम करो, रामायण के टैक्स रेट कर लो, मैं तो बड़ा खुश हो जाऊंगा. वाल्मीकि रामायण में जो टैक्स रेट रेकमेंड किए हैं वो सबसे अच्छे टैक्स रेट्स है. Okay, now let's start taking some live viewers questions. So, okay, I actually love this question. So, Gargi has asked, is there any merit in moving away from GDP as a measure of economic issues? COVID and climate change are changing civilizations radically. I think Canada has already started having a discussion. So I want both your views. So Aashish, you can go first, and Harsh, even I want to know your views on this. So should GDP be now used as a measure considering the kind of world we are getting into?
See, I always believe that the perfect should not be an enemy of good, right? So there's something working here around the world, let's keep it, because if you open the field, God knows what will come into play, right? Like how gross wokeness index, gross equality index, all those kind of things are going to see. The thing is that people confuse that there is policy and there's outcomes of policy, right? There's inputs, there's policy, and there's outcomes. Certain things should always be outcome of policy. They should not be input to the policy per se, right? Like, in fact, like deficit itself, in my view, should be outcome of policy. Why do we have to peg the deficit at 3% पहले से? तुम काम करो ना पूरे साल, फिर देखो कितना deficit आता है, right? So, but if you leave open field, then that is what you're going to get from the current crop of social scientists. So I would say, even if you don't like GDP, live with it, because the alternative will be far worse.
So I think there are two broad answers. There are two answers here. One is a more macro answer. One is a more technical answer. I think the larger answer is exactly what Aashish mentioned, right? Because it's like saying, well, if you want to compare Sachin and Rahul Dravid, do you compare run rates? Do you say how many of those centuries are scored outside India, within India? Who was an opener? Who came down the order? How do we adjust for that? How do we say 153 average is not as good as the other 57? I mean, of course, there are adjustments we understand, but the question is what kind of quantitative value you put on those adjustments. So as Aashish rightly mentioned, you can't let perfect be the enemy of the good. Having said that, on the margin, a lot of these numbers can improve. In India, real GDP growth obviously is nominal GDP, then adjusted by the deflator. How do you calculate the deflator? Is basically a calculation of inflation. How do you calculate that? Is it chain indexed? Does it have hedonic adjustments, in the sense that like in many people, again more technical people would say India inflation probably overcounts it. Our the CPI basket, which is not the deflator per se, but a deflator is roughly CPI and WPI average. The CPI basket is a bit too out of date, has too much food weightage. In general, there is no chain linking. Therefore, if there is a substitution effect, especially in a year like a pandemic, it doesn't show up. So there are all kinds of things. How do you improve the GDP number? In the GDP number itself, you can say whether you add imputed rent or not, and how you come from this number or that number, GNI. So those things can always be improved to the margin. Or fundamentally, GDP per capita adjusted for cost of living, which is PPP or purchasing power parity, is broadly speaking a good number. Now, of course, if the Chinese grew for long without having environmental protections, there is a quality of life kind of deficit because of that. The Bhutan has something called a gross national happiness index. But the issue is, how do you compare and quantify them across time? So if you take an environmental economics course, they'll tell you this is the value of all the forests and resources, and because you burn so many forests, you have to actually have an environmentally adjusted GDP, which will kind of minus for deforestation and do plus for afforestation. But the problem is that a lot of these rigorous studies very quickly become breeding grounds for activists, and they therefore, to kind of understandably get attention towards the subject, massively amplify the numbers or use wrong discount rates, etc., etc. So there are it is okay broadly speaking, and GDP per capita PPP mein we are not doing well. We are $7,000 per capita income. We are doing very well compared to our history, but we are still 7-8 times behind the United States. It is what it is, and we have to kind of do well on that metric in the coming decade.
Now, Harsh, a follow-up question to you now. This is actually something that even has been bugging me. In during the COVID time, मतलब सारी दुनिया की बच गई थी, मगर China seems to be going in a different trajectory altogether. So, can we trust economic data from China? I mean, China now being such a major player in the world economy, and you have no transparency in their accounts. But how the hell I find it very hard to digest that the whole world has gone basically to the shitter and China says, hum to grow kar rahe hain. How can they grow in such a scenario? So how much do we trust anything that comes out of China? And then how does the world hedge its bets based on that figure?
So, Chinese economic data being trustworthy or not has been a perennial debate for the last 20-30 years. Even one of the premiers, I think Li Keqiang, had something called the Li Keqiang Index, where he would kind of say monitor power, electricity, containment, shipments, whatever, 5-6 real indicators. He had some kind of way to weight them and say, I actually look at that number myself more. I think the implicit point was the way the Chinese federal system works is the governors of various provinces actually get promoted partially based on their province's GDP growth, and they have a lot of, therefore, misaligned incentives to actually overstate that, and therefore the sum of the parts is not always adding up to the entire country. Having said that, China is increasingly a service economy. You can't actually rely on such very kind of crude indices. The numbers may be inflated, but I would still say they're not too difficult to, they're not too fraudulent. And the reason I'll say is, for example, this year, by this year I mean 2020, was actually when the Chinese started opening up their capital account slowly, and they've been allowing financial liberalization in slow measures, and a lot of money has come into the bond indices. They've actually entered all the 3 major global bond indices. $100+ billion have come in. Just like India actually lost bond flows last year, even though we got equity flows. So, those numbers are fundamentally, whether China is a 14 or $15 trillion economy, maybe it's 13, utne ka hi farak hai. There is no castle in the air. The manufacturing there is real, the infrastructure there is real. One can always quibble. And as far as the particular year was, how did they recover relatively fast compared to the rest of the world? Oh, there is no doubt that the COVID numbers were definitely suppressed. I mean, if you go to any website which compares across countries, China has 0 for the last 8-9 months. So they basically stopped reporting, right? But they were also the ones who had it first. So just like India recovered by October, maybe they started recovering by June. And maybe in some provinces they allowed some people to die, but they did not lock down. It's very difficult to say. There's not enough transparency. I must say that Chinese this year, unlike 2009-10, did not open all the fiscal taps. Partially because they're already their cumulative debt to GDP is already quite high. Their incremental infrastructure does not have that benefit, marginal benefit for them, as it would be in the case of India, especially in our Gangetic plains. So they've not reacted that aggressively fiscally, but maybe they were just first in, first out, and therefore we are seeing better growth numbers. But it's a good question. I don't have the answer to that 2020 number, but in general, I don't think the numbers are that fraudulent as I would want them to be. But I think the reality is not that fraudulent.
All right. So Aashish, the next question is for you. So someone has asked, would making PF contribution optional make increase the investment as it is told by some, or wouldn't it increase the inflation as well? What are your views on the same?
I mean, I'm not sure if the PF contribution becoming voluntary will become will be inflationary as such, but I think there's a balance between having a retirement. See, India doesn't have a government pension, national pension system per se, right? In the sense the government doesn't pay you pension. You have to kind of work, even if it's a government system in the PF, say you still have to contribute yourself, right? So I think the government cannot have infinite social security if people don't plan for it themselves, right? So you can't. I mean, I don't think it will be a good idea to make it voluntary. There are 100 different improvements which are possible in the design of EPF and more broadly the Essex system, which is for people who don't earn as much per month. But I think it should not be made voluntary. There should be some kind of incentive / stick for people to save for later. Otherwise, it will put humongous burden on state resources as a society ages in 20-30 years time. I think we have a good run till about 2040. But if we don't clean up some of these things now in the next couple of decades, the governments will come under pressure later on. So it shouldn't be voluntary.
All right. So these two questions are more like, I think, on economic policies at a large macro level. So the first one is more for, so Harsh, I will go to you for this one. So with Biden in and, Chamerica back in, so how much of an effect it is going to happen on the the whole decoupling thing, and should we also go in with full force with what China did when they kept on, doing these major infrastructure pushes till the extent of developing ghost towns?
Okay, so on the first question, I think it's an excellent question. I don't think economic decoupling per se is going to happen. I think the Biden administration will be better at forming alliances to take on China, but it seems like a full-fledged trade war is out of the question for the moment. In any case, China basically signed the RCEP agreement last year. I think India did the right thing by not joining. Aashish also thinks so. But nonetheless, Australia, New Zealand, and Japan are there, who are US treaty allies. And just before Biden kind of was inaugurated as president, China and the European Union had a bilateral investment treaty signed. So the Chinese basically said, okay, we'll get all your Indo-Pacific and European allies and get some kind of trade or investment treaties with them. So because we know that you don't want to have a direct trade war with us like Trump did, you want to actually do it with your allies. But guess what? We reached to them before. So I think decoupling entirely is different. It's difficult. And as I was mentioning, actually, that's all that what I mentioned so far is on trade. Financial decoupling is actually even more out of the picture because actually the Chinese have opened up their financial markets, and Wall Street is very happy to go and serve Chinese financial needs and go and get intertwined. So it seems that decoupling for the moment is out unless it will be on the margins over the next 3-4 years with Australia, Indo-Pacific, India, Europe, UK, US, Canada, all of them coming together with Japan and South Korea. And for the moment, that seems very difficult to pull off because of various internal contradictions. So whatever containment strategy of China, like following up on George Kennan and Soviet Union, there was a recent document that was just released 2-3 days ago called the Longer Telegram by Atlantic Council. Again, anonymous like the original Long Telegram. How do you contain China? And it's very nuanced and realistic. In Martin Wolf had an article in Financial Times just today or yesterday saying you cannot contain China. Now, I would not be that pessimistic, but in terms of economic decoupling, it's difficult. Now, on the second question, in terms of infrastructure and ghost towns, I wish whoever this person is asking, I wish we were in that situation. Well, from Delhi to Calcutta, we have, 500 million people. And there is enough scope to put infrastructure there for the next 20 years and never ever reach anything remotely like ghost town. So our marginal returns are so high that we are no longer to even contemplate that situation right now would be silly. But yes, if we transition to the mindset of building before they come, as opposed to building after the need is there, and places like Bombay and Pune are clearly struggling because of that. Bombay in terms of the Link Road and the Trans Harbour Road, and Pune in terms of the airport. It would be nice for a change to actually build proactively, which I think this government is doing, given all the land and environmental constraints and this garage shed, which suddenly Shiv Sena Chief Minister's son really finds very attractive to preserve, and so on and so forth. So, usko chhod ke, I think, yes, we need a bit change of mindset, but we are nowhere close to ghost town kind of super infrastructure investments.
All right. So one question was asked to me, so I'll just answer it. So Bharat had asked Kushal bhai, what is the tax rate in the Valmiki Ramayana? Bharat, if I remember correctly, it is a flat tax rate of either 16% or 17%, if my memory serves me correctly. And I think it was either in the Balakandam or the Ayodhya Kandam. I don't remember which exactly which exact sarga. I don't remember. So pardon me about that. But I can check it up, and I'll maybe leave a comment in the podcast itself so that you guys can go and check it out. Don't trust me. So coming to you, Ashish, is median income a better measure than per capita income in a country like India where there is so much inequality? Bol.
यार ये सब मत चेंज करो. I think जो चल रहा है ना, we need to improve the quality of what we
इसलिए
are
मैं
measuring.
तुझे ये क्वेश्चन पूछा.
Let us not change the measures, right? I mean, see, again, there is a lot to be done. Like for example, should we use core inflation or inflation? I think that CPI, I think it's a very, I would say that is a very relevant debate. Should we use a 2011 metric, 2011 series for inflation, or change it to 2014-15? That is a very relevant debate. But to say, let us not use that measure itself. See, the measures, I think, okay, not to be frivolous here, but see, any economic measure is built over data collected over decades, right? You need to not only have the past data to state a series or to create a benchmark, you also need to devise measures to collect the data for future going forward, right? And data collection is not very easy. Like some of these things that we talk about today, whether it is CPI or WPI or the GDP itself, these measures have been fine-tuned over several years, and we still find issues with some of them. Like, for example, 4-5 years ago, because Nokia's factory was shut in Chennai, and because Nestle was not making Maggie because of some issues with the UP government, and because there was some increase in production of acidity tablets by one of the manufacturers, I forget which one. Our CPI was completely out of the whack because they were the factories which were the part of the sample set. Now these were not updated because यार अब मैगी नहीं खा रहे हैं लोग तो ठीक है नहीं खा रहे हैं बाकी कुछ और तो खा रहे होंगे ना. That doesn't mean कि why should that reduce inflation or increase inflation? Or if mobile phones are, if Nokia is not making, India was still buying mobiles. I mean, when this happened, India was still the second fastest growing market in the mobile phones. But so some of these measures are ridiculous. I mean, if you really go into the details of what sample is being collected, and we still continue to collect them. I mean, I'm sure someone needs to write about this, but I think typically the Mint guys do a good job of it. Pramit Basu keeps doing this kind of analysis a lot in terms of what the components of different indices are. I think there's a lot of room to improve that, to basically make it more contemporary, to look at impact of stuff like e-commerce, to look at to basically have services better represented, to not stress too much around the cost of say fuel and food, especially vegetables, because that's seasonal in India. I think some of these questions are, to me, a much broader question than saying that chalo measure hi change kar do because something doesn't sound right.
Okay, Harsh, do you think this budget will actually help India's position in the global supply value chain in terms of the infrastructure and manufacturing context? Or do you think it's going to happen?
So definitely in terms of infrastructure, logistics, manufacturing for domestic use and consumption, and therefore the spillovers for exports. But I think the government is realistic enough to not believe that we can replicate manufacturing exports the way China did from say 2000 to 2015 or 1995 to 2015. So whenever you hear the word global value chain, you have to be careful about what exactly do we mean. Do we mean about being a core part of like a transshipment for buying some raw materials from parts of Asia and then transshipping it to doing some value add, transshipping it to Europe and North America? Yes, that might happen, but a lot of it might actually just sink into domestic consumption. But what happens is when you're large enough, for example, this is an example I always give in terms of electronic equipment versus auto components. So we had relatively a more protectionist, more thoughtful trade industrial policy for automobiles in India. And we kind of therefore we had a very strong auto ancillary industry around a Maruti factory in Manesar or some other factory in Gujarat, Sanand. And then those players became larger and larger, and some of them are now very prominent global exporters of very niche auto components. So the point is, if you have to first get scale in your domestic market, the era of replicating what South Korea did and by exporting directly to the American market may or may not happen. but it is difficult to bet on it right now, given so much trade skepticism globally. So exports could be a useful byproduct of manufacturing domestic prowess, but that is not the aim. So to that extent, not value chain, but definitely on the infrastructure and logistics side.
All right, Aashish.
I'll make one observation here, Kushal. Just one observation at this point. See, India, I think on the brighter side, and again, this is very few months of data, but we seem to be hitting the 27 billion mark on exports every month more regularly. I mean, more months we are doing 27 than we are not. I think if our exports can even grow, I mean, so we are essentially sub 400 basically on a yearly run rate basis. Even if we can add 100, 200 billion from here on, that itself could be a humongous success in the short run, right? And I think the fact that India should have $1 trillion of exports has been talked about as a political ambition multiple times. Different governments have said it. This government said it. The previous government also said it. The fact is, we've never got close. I mean, we've just kind of gone beyond 350 in the last couple of years. I think even if you increase the export by let's say 20-30% from here on, that itself can be a huge leg up. So I think, yes, I mean, I think the broadly point of what Harsh said is correct. But I also feel that there's a lot of headroom here in terms of improvements and doing specific measures.
And Dr. Panagari always makes that point beautifully. What Aashish mentioned, that in terms of global merchandise exports, we are a very small fish. So Aashish is absolutely right in terms of the headroom there. And of course, overall exports are not just manufacturing exports; they're manufacturing plus services, and services have a much more kind of healthy tailwind. So.
All right. So, Aashish, a question for you was, what are your thoughts on ESG investing in the context of India and our story and trajectory, especially given our parallel protest economy affecting everything?
See, the sustainability in India, actually, for this government is not a political slogan. The Prime Minister actually believes in some of that, right? In terms of, let's say, when the government came in, they started talking about the solar and the wind part. Not decommissioning the old coal power plants, not expanding coal with old technologies and all of that, right? So even that COP21 summit, a lot of foreign governments actually accused India of manipulating the media and creating nice headlines by actually talking about big things. India took the lead on International Solar Alliance, which hopefully over time can become the OPEC of the renewables, renewable power, right? So I think all in all, the whole area of sustainability, unlike in the West, where a lot of it is just virtue signaling by a lot of companies just doing some parts of, I mean, they may not necessarily be transforming their business. The fact is that like in many other things, India is going to adopt some of these things faster than what the West has done. So we may actually do more. In fact, the last year's one of the reports said that India was the only country which was on target to meet its goals, or what assigned goals from the previous climate summit by 2030, right? So in that sense, I don't think we should approach it as an ESG specific thing. We should just weave this as part of the normal economy. This should become part of our business as usual, rather than something exotic that the West tries. I mean, I actually don't like the term ESG. ESG should be normal life. I mean, why are we talking about it separately? It's something which we need to do much more. We need to be sustainable. We need to save the planet. All of this is obvious stuff, right? I mean, there's no point in trying to. Also, the fact is that India, as a polluter, or as a, let's say, how much blame can you put on India? On a per capita basis, our emissions are way lower than a lot of other countries, right? So I think by trapping us in this verbiage, you also then start looking at us. I mean, we should not approach it from a guilt feeling perspective, right? We should approach it because that is exactly how the business is going to be run 20, 30 years from now on. So we have the advantage here, like we had on consumer technologies and banking technologies or mobile and all of that. We should make full use of that.
All right. So just one last question. Before that, I'll make a comment made by a live viewer who has said that the government should focus more on regulating the economy and get out of hotels and sundry businesses. I think that's what the budget indicates. Yeah, Mandar, maybe it does. Now, this one question, actually, Balaji has written a beautiful long form article. I think even I have shared it, Aashish has shared it, and even Harsh has shared it. So what do you think is the future of crypto in India? Now, obviously, I'm going to be doing a detailed podcast on crypto in the future. But Aashish, Harsh, I'll go with you first. Starting with you, thoughts on crypto as of now, because I could not gather where you stand on crypto, because you shared Balaji's thread and then you were also not sure about crypto. So where do you stand as of now, Harsh?
Should I go first?
Yeah.
Okay, so my view is, I feel that the underlying technology blockchain is potentially very useful. All kinds of spin-offs can happen domestically, internationally. But a private cryptocurrency versus something like a digital INR, digital rupee, is something very different, because the latter, the digital INR, which is basically like you have rupees with the RBI itself. Like you don't need a bank account or a demat intermediary or some kind of depository. You don't need a Paytm account. You basically download an RBI app at some point. So I think, and in a way, what RBI did with Retail Direct today, of course, assuming what Aashish mentioned, they operationalize it well, is in that direction. I think that is very interesting in terms of reducing frictions, at least within India. Crypto has a lot of potential to reduce friction for, say, remittances and all that. But the problem is the sovereign will never let go the power of fiat currency. And crypto, for example, Bitcoin is based on Milton Friedman's K% rule, or where K can be zero. The idea is you cannot create more Bitcoin, or any currency you take, it is limited by the algorithm that is put out in the beginning. And therefore, you cannot quote unquote debase or inflate the currency. And that is what a lot of people say. Oh my God, look at the age of quantitative easing. And I think Balaji also calls it digital gold. But I am still making up my mind on it. In my earlier libertarian days, I was more in favor of it. Right now, I'm in a more statist phase. I personally think it's a problematic one for a large country like India. But I'm open-minded about it. And I think what the government has done right now in terms of saying, well, we don't want private cryptocurrencies in India for now. Let's first do a digital INR through RBI. I think that's the right step. But just FYI, I am discussing it with Balaji and other people. So let's see. As of now, I think the sovereign cannot let go of a monopoly on currency. That's my 101 take on it.
All right, Aashish, what's your take?
Actually, I don't have a take, Kushal. This is one area where I'm still studying. I don't consider myself knowledgeable enough to comment on it.
वाह, क्योंकि पहली बार हुआ है हमारी पॉडकास्ट पे और भारत के इतिहास में किसी ने बोला है मला माहिती नहीं. ये बहुत बड़ी बात है क्योंकि कोई बोलता नहीं है. So Aashish, but see, so you have a dedicated viewer right now who has asked you a follow-up question on your comment on renewables. But I'll ask the question because this is the last one. So Gargi has said, Aashish, India is not going to meet its solar target. Solar is too inefficient. Shouldn't budget focus in investment be in other renewable energy markets? So Gargi, first of all, solar is, in my view, and if you remember, I don't know if you've seen a discussion Aashish and I have had. I think Aashish and I had talked about solar and inefficiency, I think in our 2020 wrap-up discussion, where I had mentioned nuclear being a far better option. So before I give it to Aashish, I think has the time come that India should have that final nuclear push?
Yes, I mean, there's no doubt about it. I think nuclear energy is the most efficient form of renewable, so that should be pushed. I have nothing against that. On solar, I'm again, like Harsh said, we should not be too worried about the data here and there, right? Like Harsh said it in the context of the Chinese economy. Even if we don't do 175 gigawatt, 100 gigawatts of solar, we would have reached, let's say, 70, 80 by, in the next couple of years. So that's fine. I think directionally we are improving. My comment was not on the target for solar. My comment was on the emissions target by 2030, which we signed up for in the previous climate summit. That India is the only country which is currently on target to meet that number. So as such, we are already doing good. My larger point is that we should not think of sustainability as a guilt-tripped country. We are a young country. We have a lot of growth ahead of us. We should do what is right for us. And we should build sustainability in day-to-day life, which, by the way, is an Indian ethos any which way. The West did not preach us on some of that, right? In terms of not spending more than our means, or taking care of things around us, living beings around us. All of that is just natural to us. So we don't need any lectures there in terms of how ESG is modeled in the Western world. That was my broader point.
And just very quickly, solar plus wind plus storage, whether the storage is battery or it's kind of hydro/gravity, is actually reaching break-even levels without any subsidies to if it has already reached actually to thermal power, for example. So I'm not sure it is correct to say that solar power is not efficient. So nuclear has great attractions. I fully support it. Solar can be more of a distributed model, right? I mean, for example, if you have a village or you have a large house, you can be off grid. You can actually sell to the grid. You can actually connect it to your e-vehicles that are likely to come. You can reduce all these imports, and I think so. I think the government is doing a lot of good stuff on that. So I'm not sure.
Agri feeders. I would encourage listeners to look at the Kusum program. If you have looked at the stock prices which are into water pumps, etc., they've shot up because of this Kusum program. In fact, Bloomberg NEF New Energy Foundation, I think it's called, they did a good article on it, I think just last week, on how this program is driving the solarization of the agriculture economy. So some good interesting stuff happening there.
Look, solar can only work if you don't have to store it, and it is in a net meterage format. Other than that, I can tell you solar is not going to work. Yeah, maybe in rural areas it's going to work, but then in the larger macro picture, how much of consumption that is. So when we are looking at a macro picture, we'll have to consider how much power is going to be consumed in those areas in rural feeders. So we have to balance it out, because if you're talking about carbon offsetting, then what are we going to do with the batteries? The batteries also come into the picture, and the batteries also cause a lot of problems with the mining, and so it's a mess. And आशीष हमेशा याद रखना, जब हम ये चीजों की बात करते हैं तो हम ब्राह्मणिकल फैशिज्म लाते हैं, वो लोग बात करते हैं तो वो लोग क्लासी वीगनिज्म लाते हैं. So never forget that. So I guess we've covered all the questions. So guys, it's time to wrap up the discussion. So before we wrap things today, I once again want to thank Harsh and Aashish for coming on the podcast and answering not only my questions but each and every live viewer's question. So guys, as always, it's a pleasure to talk to you.
Thank you. Thanks, Kushal.
Okay, guys, time to wrap things up. If you like the podcast, please subscribe to the channel, share the video, like the video, leave a comment in the video. Also, अगर आप मुझे ट्विटर से जानते हो, कोई भरोसा नहीं, ट्विटर बंद हो जाए इंडिया में. So please go and follow me on Facebook and Instagram and on YouTube. आई एम वेरी सीरियस. कुछ पता नहीं आजकल क्या हो रहा है. ट्विटर अपने मूड में है, गवर्नमेंट अपने मूड में है, तो शायद गवर्नमेंट ट्विटर को बंद कर दे. तो प्लीज जाके दूसरी जगहों पे follow the podcast. Also, if you like what I'm doing over here, please become a member of the YouTube channel, or you can go on Patreon and you can become a subscriber there too. Many people don't like to support me financially through that, so I've started a UPI option also, so you can send the money there too. The details are on the website, or you can buy the merchandise. Anyways, I'll see you next time. I have a monologue lined up next week. I want to give my views on a lot of celebrity endorsements are happening these days, so I'm going to give you my views on whether celebrity endorsements work, and if they work, how do they work. So I'll see you guys next week. Until then, namaste, take care, goodbye.